Trading sentiment. In this video we examine how to understand what sentiment is in the market and how it affects other assets. Now when we talk about sentiment, we're really talking about equities and stocks or stocks. The market is layered. On the very top of the layer you get your stocks. That's your equities, your S&P 500, your Dow Jones, your Nasdaq, and the other indices. Then you get your bond market, US treasuries. So moving up or down, that will affect your sentiment. And at the bottom of all those markets, you get the forex or the currency market. Now, importantly is all those assets, all equities, all stocks, and all bonds, they get priced based on the currency. So the forex market is holding everything together. However, due to its nature, forex market is very low volatile, and it's not a driver as to say per se. It gets more affected by other markets like the stock market and the bond market. That's how you find that the forex market moves after those moves actually crystallize, which sometimes makes trading forex easier than those other markets, because forex is more a reaction to what's happening in the world. It's rarely a leading indicator. But how do we understand what drives the stock market or equities? Because at the core, when we talk sentiment, we're talking equities. Sometimes it could be commodities. Higher commodity or lower commodity prices tend to reflect market participants' view on risk sentiment. Sometimes it could be tech companies. Other times it could be the Federal Reserve pumping liquidity into the market, or it could be political events specific to the United States or the index you are looking at in a particular country. Now, commodity currencies are most reflective of risk sentiment. Commodity currencies like Australian dollar, New Zealand, and Canadian dollar are closely correlated with the commodities that export. So if market is starting to buy commodities because of risk positive sentiment, you find that the first reaction you get in the currency market is from one of these three currencies. But what drives sentiment on a daily basis? It is always news. 24/7, you get news headlines explaining what's important, what's not, where's the fear, where's the greed in the market. So if you can see that your stock market is moving up, your bond yields are moving higher, that usually means that risk sentiment is positive and risk is on. Means your commodity currencies should be moving higher as well. There are some very specific times where the currency is detached from where the rest of this risk sentiment is trading. You can see a divergence. That usually comes down to the specific reason that's moving the market. For instance, maybe copper is moving higher, but Australia is suffering from huge typhoon and some of the miners are currently shut down because of bad weather conditions. In that circumstance, maybe Australian dollar won't be able to benefit from that risk sentiment. Or some other times, maybe oil is moving higher, but Canadian dollar can't benefit from the higher oil prices because producers struggle to move oil to the tankers because of maybe pipeline issues. So it's really important for you to understand what are the reasons that are driving risk sentiment at a particular time. And you also need to understand is why some currencies move with particular assets. So when those assets become vulnerable, or the particular currency in the country has specific issues, you'll find there's a divergence from the risk sentiment. So you shouldn't always assume just because equities are up, everything is always hunky-dory. Sometimes there could be specific situations where you will need to hold off and watch things unfold until the divergence recouples again. Now, sentiment as a whole, or risk on, risk off, also RORO, is a daily thing. And the sooner you find out about the risk sentiment, the quicker you could be on the lever to try to leverage on that. Because when it comes to risk sentiment, first come, first served. So whoever understands what the risk sentiment is for a particular trading session, for a particular day, will always be able to benefit the quickest. This is a chart of the S&P 500, which is at its heart representative of risk sentiment in the market. In the longer term, S&P 500 tends to move higher, but there's situations where, again, either political issues or some of the companies, tech companies having issues, getting probes, and that drops market. Sometimes it's commodities crashing, and sometimes the Fed is holding back on liquidity. That could affect S&P 500 on a daily basis. I've overlaid it with the AUD/USD, which is a risk-sensitive currency, and the majority of the moves tend to be in line with the S&P 500 over the months, specifically as we are right now in a risk-positive era altogether, as the news would reflect as more as a reflation trade currently going on. So majority of the time you'll find S&P 500, AUD/USD, they'll react very closely as AUD is a risk-sensitive currencies. The other risk-sensitive currencies as well, like GBP/USD and other cross pairs, that do reflect on risk sentiment. Again, it's really important to understand what is driving sentiment for the day, and there's a bit of a learning curve. It's not like an on and off switch you can read anywhere. There'll be more understanding what is the reason, how did a certain currency react to that sort of news in the past, to be able to decipher if you are on a path of higher or lower for the day. But as a rule of thumb, if you got the equities moving higher, you got your bond yields moving higher as well, you should be able to see bids going into those currencies. Now, as AUD/USD is part Australian dollar, part United States dollar, it is obviously very important what's happening with the US dollar as a whole. So when you read your new sentiment and you get a grasp of where you are in terms of the risk on, is it bad or good, you'll be able to reflect it onto the US dollar as well, and able to see where market is headed for the day. Sometimes some of the themes play out over a longer period and weeks as well. So again, just to recap, risk sentiment, when we say risk sentiment, we're really looking at equities. They are the best benchmark that reflect euphoria or angst and fear in the market. Some of the currencies are closely related. There is particular times in market where there's a divergence occurring. The way to understand the divergence is if you understand what is currently driving a particular currency. There might be counter-specific issues that's holding the currency back from appreciating.